Welcome, crypto enthusiasts, to the Independent Reserve Podcast. We're joined by industry leaders and experts to keep you informed, entertained, and on top of the latest trends in the world of crypto.
Welcome back to Independent Reserve's second podcast. JT, Head of Trading, Lee Eaton here, National Head of Business Development, and our guest today is co-founder of Not Centralised and President of the Australian DeFi Association, Mark Monfort.
How's it going, guys? It's good to be here. My first time to the office too. It's great to have you here. It's pretty cool things that you've got. I've already been digging into the lollies, so thank you. Independent Reserve for the lollies.
Absolutely. We've been here now for a few years. We're settled in, got everything thrown up all over the place. Where do we start from?
Getting lost at the start. Going to the right side of the street.
It's definitely not because I gave you the wrong address.
No. Paul. There's no such thing here. So.
JT, it's been busy since we last chatted. Markets are pumping, Bitcoin's up.
Yeah.
What's been happening with you?
We're so busy. We've been speaking over probably the last 4 weeks about a really significant turning point in what we're seeing across the desk. And it began with Bitcoin, and we saw some Bitcoin dominance. It was interesting. Yeah, we looked quite extensively at the Bitcoin chart, the Bitcoin cross, and we just go back over time and look at historical levels. And back in April 2022, the Bitcoin cross hit around 0.052, 0.053, and that's where we've hit again this time. That was about 3 weeks ago. We've now tried to sort of push above that level, and it's been really interesting. It's sort of been quite captive, really, between 0.052 and 0.056. And what that means is that this market surge has been dominated by Bitcoin, the USD spot ETF proposals, which I guess the market is now becoming much more comfortable that it might get approved by January next year. And it just feels like there's more risk taking into lesser market cap tokens, and the market is going up, and definitely seeing that sort of risk appetite is paying dividends at the moment.
Yeah, awesome. Alrighty, Mark, we're going to get stuck into you now. So like I said, you're most well known for being the co-founder of Not Centralised, but also president of the Australian DeFi Association, two, I guess, new and evolving organisations, and they're going really well. Do you want to give us the rundown on both those two?
Sure. You can think about Not Centralised as being the commercial entity, and then AusDeFi is the not-for-profit. Why a not-for-profit? It's a great question because I've never been into that kind of space. So I've attended a whole lot of meetups before, and I've been very happy going to other people's ones. Never wanted to be an event organizer, but we just saw that there was a bit of a gap in the market that 2 years ago or 2.5 years ago, we were going to other third-party kind of groups and meetups, and then we saw that there was no conversation in the middle. And we weren't necessarily all that well known. We weren't jumping on the crypto Twitter that much. We wanted to talk with the local people, all the ones online with the celebrities and the well-known people in the space. We wanted to just get to know people here. And so we thought, let's get a little WhatsApp group going. A bunch of us that are trading, a bunch of us that are interested in the space in terms of building. That turned in from 10 in a WhatsApp group to about 100 in a Discord. And then people started saying, well, hey, we've got this space here. Do you want to start doing meetups? The first meetup we did was at a pub. It's across the road where I used to work at. I used to work at the ASX, so the market's background and stuff. But yeah, we were inspired to create this conversation in between other meetups, and then it slowly evolved into something where it's like, hang on a second, we've got something here that's interesting. The stuff that we're talking about as we're learning about the industry and how blockchain technology works and how the investing is similar in some ways to our traditional kind of finance backgrounds. We thought that what better way than to let's see what happens if we start a group. Can we get sponsorship? No sponsorship at the start, so we started just funding it ourselves, put a couple $100 on beers and pizzas, and then after a while it just grew into something that is much bigger than we ever imagined it to be. And thanks to having the association, all of our commercial endeavors, what we're doing at Not Centralised with both blockchain technology, things that we're building and consulting on, and AI even as well, both of those things are helped by running these associations that are much bigger than just us as an individual company. If we went out there just marketed ourselves, it would have been a hard slog. But because we've created a community and other people are showcasing things that they're doing in that community, you guys are, and it's so much better. Like, it's much more connected, and we actually get to help each other because we're still such a small part of the market. We're growing with what rapid, pace. Like you said, the big Bitcoin ETF, where that unlocks, we're going to see an influx of money coming in. But yeah, this is like our little part in this little patch of the world. But through all of this and through the people that are really connected to the space, APAC, people from the US and Europe, we're connecting with so much more than we could ever imagine. So yeah, those are the two things: commercial and community. Big C's.
That's awesome. Yeah, that's super cool. I see. I follow you on LinkedIn. I know you guys are super active, and you've got an event, and they're well attended. So, what sort of size now? I mean, how big is the organisation getting now? The DeFi Association. I mean,
it depends on, I guess, how you want to cut it, how you want to measure it. But one way to measure it is like how many followers we've got on LinkedIn. So there's like nearly 2,000 or so, or maybe just over 2,000. The newsletter's got over 1,000 people there. Twitter, there's 3.5 or 3.6 or something like that. And then even the association itself, like on Discord, there was about 1,300 real people that were joining and were coming to the events. And when we do stuff online on the Discord, we get some good numbers there. We ran something earlier this year because we couldn't do an event in April. We said, well, why don't we see if we can connect all the different borders? And we had something where 7 cities presented what they're doing across the country. So from Adelaide to Perth to Brisbane, Melbourne, etc. They were all showcasing projects from there, and it was like a 2-hour meetup. Well, kind of want to do that kind of stuff again, but yeah, different ways of measuring it. But put it this way, consistently in Sydney at least, we're getting like 60 to 80, sometimes 100 people come to these events.
Yeah, nice. And what those sort of meetups look like now? I mean, what are the sort of main things people are talking about? Where's the sort of real interest? Like, what's sort of getting people excited right at this very moment?
It's a very good question. I think even there, if I have to reflect, and I'm kind of doing it on the spot here, but it has evolved as the market's evolved. Like, as we know, say 2 years ago, people were still talking a lot about, I think the hot topic was like Axie Infinity and a lot of gaming guilds being built up, and we saw a lot more people creating these NFTs. And that was great. But as we saw, whether it's 3 Hours Capital and Celsius and FTX and all these other ones kind of collapse and take a bit of air out of the market, we still saw a lot of people coming to our events, but instead of people talking about those like obscure projects that one day may or may not make money, or maybe they've built on a bit Ponzi-nomic type kind of business model, a lot less of that and a lot more practical infrastructure type the people were coming in. And so whether it was groups that were building stablecoin wallets that you can trade with, and so you can buy things with your MasterCard, for example. There's groups like that, or others that are building infrastructure or blockchains with more of a compliance lens because they're looking to the future. We were seeing where, I mean, the way that I kind of see the whole kind of markets is that you've got you also know the Gartner hype, what is it, on the Magic Quadrant, the Gartner hype cycle thing, where you get the hype and then it dips, and you got this thing they call the trough of disillusionment. And when it matures, all industries, they mature to a lot lower peak than where the hype originally was. But that is where you get mainstream adoption happening. So like BlackRock and all the instos, I think we're heading there. We're starting to see more of the mainstream, like the banks, whether it's banks here, a bit slower than what's happening overseas, but we're seeing more mainstream corporates coming in. Like I'm seeing a lot of telcos coming into the space. So conversations in our community are much more around the builders and developers and what's happening here and overseas.
Yeah, awesome. One of the things I've always noticed about the crypto industry, if you want to call it that, is that no one goes to university to become a degen or a crypto professional, right? It's this thing that sort of happens off the back of someone taking interest either in the technologies. They've either got a technology background, or a lot of people come from TradFi into it because they've got a markets background and they can see that element to it well. So people tend to come from various industries. Mostly because they're kind of passionate about it. They've gone and done their own research and they said, hey, there's something cool, there's something awesome here. So I guess a couple of questions. First one is like, where do you find sort of in the DeFi community, on particularly this association, where are people coming from? Are they predominantly sort of tech people? They're kind of like artists, like digital artists who start off in NFTs? Are they a bit of, kind of a bit of everything?
It's a bit of a melting pot. that I see. There's the people that are coming from all over with the common interest of knowing that there's something better out there than what is currently in the market. Like the way to see DeFi, decentralized finance, it's a centralized commerce as well, right? It's not just the investing and trading side of things, which I think is very important, just like we have a healthy stock market in the traditional kind of equity space. But these are ways for people to invest. So I think that's very important. But we're also seeing people that they're in marketing and they see this new industry that they've got an opportunity to take part of because they missed out on the hype around the internet. And with all of those kind of hype waves, a majority of companies failed during the first kind of internet wave. But the ones that lasted, the ones that have been there, I mean, you guys have been around for 10 years, they're the ones that have done really well because they be built in such a way that they can ride the waves of the ups and downs of new technologies. So we're seeing a lot of people that are just interested and they're coming from all different backgrounds. A lot of developers, because when we survey every now and then when we do these meetups, I think like consistently just around 50 to 60% are either in startups or they're developers or startup founders themselves. So these people that are, at the core of these new businesses, some of which may turn into the next unicorns.
Yeah, it's such a fascinating thing to think about. I mean, we are so early still. I mean, the internet had been sort of around before sort of mass commercial adoption. I guess that was kind of like the late 90s or whatever. And we feel like crypto's maybe in the equivalent maybe of the late 90s in terms of that phase. And, in 1999, if someone had said, hey, you can invest in a Google or a Yahoo or a Alta Vista or a, bloody Ask Jeeves, or you just like there was all these like web browsers you could have gone to. You didn't know which one was going to win.
Yeah.
But and it kind of feels like that now. There's a lot going on. Who exactly is going to win and how it's all going to play out? You just don't know. But those big companies of the future kind of taking formation really right now. And super exciting.
It's interesting, right? Because we've got this opportunity to invest in these companies that we didn't have before, but we all know that there's certain kind of best practices around investing that unfortunately people are just missing out on. So they're throwing away their life savings, they're not hedging, they're not diversifying. Like it's interesting. I find anyway. What are you guys done at?
I think as it becomes more mainstream, as there's more comfort around regulation and more access, specifically for retail avenues. I think that's going to start to be the real telling conversation as to what does it mean to asset allocate into the digital asset space, and what does that look like maybe more in a balanced portfolio of traditional financial assets inclusive of digital assets and cryptocurrencies. And this ETF is going to be probably that first major step into what does a balanced portfolio look like if you can own some digital assets in as ETF form, and then what does the performance look like? And when things start performing, I guess more interest and more eyes start looking at projects, and they become much more robust, and they get more capital associated to them, and those things on the wish list can then be ticked off and developed, and those projects can really accelerate forward. I think it's just going to be a really interesting. Hopefully, at the start of 2024, it's going to be really interesting to sort of shine the light on what institutional capital might look like for some of these projects, and then how the space transforms, maybe over the next 12 or 24 months post that, to become a little bit more mainstream, and for capital to be allocated into some of those wish lists for these projects.
It's exciting, right? Like for us, seeing developers moving into a kind of like that next year where they've got that potential of that better capital allocation, rather than just, we've had VCs and we've had angel investors, but when we get that mainstream that you're talking about, that maturity of market, it's going to be great for the developers in my mind anyway. So.
Yeah, for sure. Hey, can we go back one step? Before, I know we will definitely got to come back to our crystal ball predictions, but we have to spend a little more time grilling you, Mark. JT last week made a lot of fun of me for having my list of questions, but I'm going to go back to my
many questions.
I'm going to go back to the world.
ChatGPT or no?
No, I had many questions. So I'm going
very well thought out.
I'm going I'm going back to the well in my list of questions because as we just talked about, everyone sort of like everyone now in DeFi, in crypto in general, has come from somewhere else. So you had a life obviously before crypto. Where'd you start and how'd you get here? And don't say the train because I know you're
Oh, okay. Yeah. So apart from the train, I was born in a little village I was born in Manila in the Philippines. My family came here when I was 2, so I grew up in Australia, right? Immigrant family, but I had a really good life here, and I worked in finance to begin with. I was an accountant by trade. I did it for like a year and a half before I realized this isn't the pathway for me. Worked as an analyst because I was really good with numbers and ended up in financial markets and selling software as well. So a bit of like software side of things in terms of doing data visualization type stuff and reports. So I was really good at that, and then learned about equity research and worked at a boutique firm that got acquired by an investment bank. Worked overseas in London for a few years in the markets and did a little bit of time back and forth in New York, and ended up working at the ASX before going back into being a head of technology and data at some accounting firms. And so all that full circle, and after that, like, God, what was it, like a nearly 20-year career, it felt like, okay, I need to finally pull the trigger and go work for myself. And I've got mates that wanted to go into business together, and we were just doing just data analysis kind of work. We were doing consulting and strategic things in terms of like how you actually place your data to get the most efficiency out of it. We were consulting to superannuation firms on mergers and things like that, and a whole lot of stuff in ETF land. And so it was all data. And then someone came up to us and said they had an opportunity in this blockchain in a gaming guild. We're like, what the heck is a gaming guild? And so, yeah, from there we learn about blockchain. But it's been a world full of numbers for me. And like I see a lot of patterns with what my career was like before in terms of the things that I saw with software. There's like automation software and how trading works and how the financial markets work. See a lot of similarities in crypto. So yeah, man, it's a bit exciting, but we can dive into that more.
Well, I want to know what your friends and family said. When you told your parents, hey, I'm going to leave my secure and prestigious job in TradFi to go and do this thing, they thought, what the hell is that? What did your friends and family say?
Well, here's the thing. Like I softened the blow for that because I left my cushy kind of well-paying job in doing like I was like the data nerd in a company. I was almost like the CTO, you could say, but I left that kind of a role to go into business for myself. So the blow was kind of softened for them because it was at least a year later before blockchain came along. So, but I made some good money and stuff in terms of consulting. But even then, they're like, there's a lot of doubters, and it feels like there were a lot of doubters, and we can see it from the evidence, right? There were a lot of doubters about the internet way back in the day. So it feels like that early stage, but we know that the wheel of innovation rolls on, that these things will just improve. There's no way that we are just staying where we're at in terms of how technology is. Look at every year there's a new phone. Every 6 months there's a new iPhone or whatever it is. Like, we can't stop innovation and progress, and we're going to see it with capital markets as well.
Yeah, it's such a mistake that people make, is they say, well, look, here's everything. Well, the technology is not everything, so it's failed. As they're going, no, you can't look at where it is now. Always got to look to where it's going. And I think obviously the DeFi guys and people building a space are going, okay, we can see what needs to happen, and we're in that path. Okay, so Not Centralized. So you started that with Nick and Arturo?
I did,
yeah. All right, talk us to that.
So that came about because, and even just the name itself, like we were kind of going back and forth with a few people. We initially wanted to create it as a bit of a DAO between like other consultants potentially wanting to work with us. And we just found from the early meetings, it was great, but there were too many different directions people wanted to take it in. And so we thought, well, the core group, let's just start this off and see if it turns into something where if we get big enough projects, we bring others in and we get to, because some of those people we'd never worked with before. So it was just on a whim that we're all interested in the space. We thought, we'll do it as the core. We'll try to find work in the Web3 space. That was primarily what it was. We were still doing work in traditional kind of consulting and data, and Nick brought his M&A kind of experience into the space. So he'd done M&A for both Web2 and Web3, and so we had the deals side of thing there. We had the product development side of things where we would actually consult on smart contract or tokenomics, or like creating like the builds and protocols that others needed. And we had the community. So those three arms, like product development, community, and capital raising, was pretty formidable in terms of a market offering that we found. And we got various jobs initially. It's been a bit of a roller coaster. And I guess the thing that we saw there at the start was that we were just a couple of folks that wanted to work with each other because we had that same ethos. We saw that this technology is going to underpin a lot, and we just want to be involved, even if it meant taking a bit of money off the table for our families, unfortunately. Because if we just stayed on our path, we could have been in a very different, it's good now, we're doing really well, but that first couple of months and first year of doing things on your own, it's not that easy, right? You have less guarantee, there's more stress and whatnot, but we believe that it's worth it because we can see where this trend is heading. And like I said, I was too young to ride the internet wave, that first wave there, and even missed out on like the first kind of like DeFi, summer kind of thing. But there's going to be more of that. So yeah, Not Centralized believes in decentralized technologies and the power of them. So we decided to call ourselves that, because some people go, oh, not centralized. Hang on a second, but you're working on centralized projects over here with the RBA, or there's three of you here, you're not a DAO. It's like, yeah, because we believe in decentralized tech. So
yeah, awesome. Hey, I don't know if we'll have to cut this bit out, but also does Nick, he from day one, he also brought an impressive tracksuit collection as well.
Do not cut this out. But like he has always been a degen in suits clothing.
I love those. Always see him at events, and he's always looking. I love them.
They're different tracksuits. I'll let you in on a little secret. It's the same tracksuit. Sorry. But no, he is amazing fashion sense. His shoe collection is even better. Rivals Arturo's. It puts me to shame. I'm not into my sneaker collection. I'm a bit more formal with the the Iron Williams type boots and stuff. But yeah, Nick is probably the most veteran in terms of TradFi. He was head of fixed income at various institutions, well-known global institutions. He is very well respected. Still appears on AusDeFi quite a bit in terms of getting his market reflections. He's quoted in the AFR quite a bit as well. He's a very well-respected individual when it comes to capital markets, yet someone like him, and there's a few others like this, whether it's Drew or Robert, or Rob War from NAB, those guys from NAB, and others that are these traditional market stalwarts. They're experts in their field, but very well respected, and yet they've seen the power of this thing. And hopefully it means that they're bringing others along with them. But yeah, tracksuits, Nick's on point. We need to get some new ones though.
I've seen his resume. It's very impressive. Just from various events where people run through the stuff he's done. I don't know. I bumped into him and I saw him in a suit, and I said, I almost didn't recognize you in a suit because you didn't have your tracksuit on.
It's shocking. And he will rarely needs to put the suit on, but when he does it well. Let's just say that.
Good. Okay, we're not cutting that bit out then. All right, so where to next, gentlemen? What would we like to talk about? JT, this is what happens, JT, and you don't have a list of questions. You're not on now. No, don't.
Why?
Well, I guess, when I first met Mark, it was an introduction to, trying to think where we were. I think it was, we're going to have to cut this out. Who's the gaming operator above Apple?
Immutable. Yeah.
So when I first met Mark, I think it was in the Immutable offices.
Yeah.
Sure. Holding and hosting a panel.
Yeah.
And became very easily known and very. I was very quick to acknowledge that you know everyone in the industry, and you're at the very, very pointy end of conversation and some of these projects. For me, I'm really interested in how you break up the Australian market for crypto, because we're very Sydney centric, and we understand the Sydney community really well, and I'm really interested to hear from you. What else is happening around Australia, and are there different segments of Australia which are looking at different parts of cryptocurrencies and digital assets?
First of all, I think that the information that we've got, and it's always evolving over time, is based on the ones that we do know about. It's like Donald Rumsfeld in that famous quote, there's the unknown unknowns and the known unknowns. We know that there are unknowns out there because there are so many people that say they live their community. They live their life in the community online purely. They don't really venture out there. We've had a few that have come to the events as developers and DeFi and whatnot. a lot more of the libertarian kind of ones, and they have that kind of belief around like not just crypto and technology to kind of help the real world, but they see like a future world where it's a bit more of a utopian thing. And that's great. I think we should have those ideals, because we just think that everything's okay, none of us would be here, right? But what we're kind of seeing across different states is that there's various places, like so in Sydney and Melbourne, quite similar to each other. Melbourne, for a while for us, at least from our experience, and this is all just based on our personal experience, in the world of DeFi, we found that with them, they were experiencing a lot of NFT events in the first few months, or that had for years. And in the first few months of us going there, the common call out to us was that thank goodness that you guys are doing this, because we hadn't had any kind of DeFi or non-NFT events for a while. So it felt like there was a pent-up demand for that kind of stuff. And because they've been going at it for a while, they had the blockchain hub over different years, and RMIT was involved in that as well as others. There was a lot of built-up experience, and we learned a lot from the folks in Melbourne. And then in Sydney, because there were different groups that we had started kind of going to, we'd seen that there's groups that have been around since 2013, since you guys were starting, right? Like Blockchain Sydney, etc. Brisbane was a bit newer, much more around like the education and stuff. We found the people there was kind of like going up there there's groups that are building up there, but we found that there was a lot of like NFT kind of focus as well. It was a bit newer. And then over in Perth, we're covering like kind of gems there, like whether it's there was a group that was kind of there with us around the music space. There were others that are doing NFT projects, but more helping overseas. Kind of felt like more of its own kind of country there. But the good thing was that over time, as the months were rolling out, as we were being a bit more consistent in Perth, we were starting to see more and more numbers just growing, just like Sydney was. So really excited about that. Haven't done too much around the middle, but from what we see in terms of the events, Adelaide, for example, there is a community there, but they don't go out as much. So it's still to be uncovered. We know that there's great groups out there, like the Verita that's doing the security kind of protocol and stuff, and others building out there. There's Faculty Group, which is like they're like a venture studio, so they're active investors. They're not just putting their money in, but they're actually getting involved in some of these things, but doing more stuff overseas. And we know that there's others, like I've tried to uncover, and with help, all of these things happen with help, because we can't do it on our own, right? We need people there. But we've seen the uncoverings of a bit of a community in Newcastle and in Canberra. It's hard to kind of put a picture on like, Melbourne is NFT, Sydney is this, thingy is that. Although, some of the biggest gaming ones I know are Sydney, Illuvium and Immutable are here, right near all of us. So I think that a lot of the folks that are in now, let's just say that over the 2 years, we've seen a lot less NFT projects. There was a crap load of new and existing NFT projects. Some are still there, and they've done well to kind of stick around and stuff, but we're seeing a lot more infrastructure, mostly out of Sydney and Melbourne. But we know that those other cities, like they have their folks there. So I think, I'd love to maybe we should do a road trip, get to know different communities that are out there, go to the country towns and stuff, and get those builds out there, because this is the thing, this is the beauty of it. We don't need to be physically located in a certain city for this to work. You can live in Bali. I mean, you got to check what this, Harry Dell put out because a lot of people think that if you just spend, more than 6 months out of the year out of Australia, you're fine from tax perspective. It's not the case. There's other tests that you got to have an actual proper residential address outside of Australia to be considered, non-tax resident for that purpose. But in any case, if you can find a way to work for you, you can work from anywhere, right?
Yeah.
What was the question?
Oh, no.
And this is not tax advice.
This is not
please consult your own independent.
Anyone who's been following you on LinkedIn, which I have, has been looking with envy, because you've been just jet setting your way all across everywhere this year. In fact, you've probably spent as much time in the air this year as you have in various locations. But
feels like it.
So you were everywhere, went to basically every conference around Asia, South Pacific and Asia this year. What was some stuff you saw overseas that you'd like to see Australia do more?
Great question. We got a long time to. No, Australia's great. We are so comfortable that we've got good regulations, we've got a good banking system, and it's led to us being well protected from things like the GFC, right? Global financial crisis. For those that don't remember, back in 2009, we didn't get hit as much, right? But at the same time, the double-edged side to that coin is that we're less advanced when it comes to trying things out. It's great that the RBA did their pilot of CBDC, because that's much better than trialing it with the public rather than, going out there and saying that's what we're doing. But because we've had comfort, in our systems, edit that out. Because we've had comfort in our kind of traditional kind of banking commercial systems, and we've got a government that we mostly trust, we don't have the innovations that we've seen overseas. So, for example, in the Philippines, really interesting apps over there. They've got things like Gcash or PayMaya, where you have these mobile apps, and with grandmas scanning QR codes to send money to their nephews and nieces and grandkids, trading on that app as well, and then being able to do other things with that app, but anything to do with say foreign currency and transfers. So they've created these all-in-one kinds of apps, but then parts of the community, like in the Philippines, for example, if you're a pensioner, you get 20% discounts on a lot of things. Yet when you go to the store, you might pay with your Gcash or something like that, on this digital app, but at the same time, then you've got to fill in this manual piece of paper, which gets, all of these things get stacked up and sent back to the government to audit that, people are using and not abusing their, whatever it is, their monthly kind of stipends or their monthly benefits as a pensioner. So there's still a bit of a dichotomy. We're seeing that there's different countries have different types of interests. Like there wasn't much of a conversation around, say, AI, for example, in Hong Kong, because in many ways it's banned there. Like ChatGPT itself is, you need to VPN in to get access to that. Maybe that's changed, but it was much more of a crypto conversation alone there. In other countries like Singapore, we're talking about both AI and crypto and how they help each other. And we can dig into that later, but people think that it's just AI that helps everything else, and it's not like blockchain can help AI, but it can. So we're seeing some interesting conversations in the world of emerging tech, and whether it's Singapore, the Philippines, or Hong Kong, and other countries we're going to get to go to, we've got partners in Vietnam, and we're seeing some things there. I think the things that I want to take from that is that there is so much innovation happening outside of the bubble that is Australia, and if companies out there are feeling like they're not getting much traction here in Australia, just look over the shores, try to do something overseas. And we've got groups in the Australian government, whether it's Austrade or the Export Council of Australia, that's really helping all these Aussie companies get over there. They've helped us.
Yeah, right. And having those very foundational conversations, with people who are starting businesses, within the crypto space. How has the conversation changed over the last 12 months when we've gone from a real peak in cryptocurrency prices, then to hopefully what is a trough and now a re-acceleration? How has the conversation changed during that point of time, and have people been changing or pivoting what their business is and where their trajectory is going to end up?
They absolutely have, and it's different ways to kind of tackle this question. But I guess starting from our point of view, we're very pragmatic in terms of how we see things. Like projects were coming to us, NFT projects and whatever they were, a tokenization project. Before the term real world, RWA, kind of like real world asset tokens, was becoming popular, there were already groups that we saw in Australia thinking that far ahead about how to do things. But with all of them, the thing that we saw as like issues was that a lot did not have, when it comes to the tokenomics, the design of how the token would work, the distribution and all that kind of stuff. For me, the best kind of tokenomics model is something that is very much similar to a real world business. And what I mean by that, like the non-Web3 businesses that have built stuff, they clip a ticket, a percentage fee, they clip a whatever it is, the price of using the product, and people actually want to use the product, and it's available and it's easy to use and it keeps improving. We were seeing a lot of projects that were in mainly for the excitement. And when it came to explaining how they were going to be sustainable, they really couldn't, unfortunately. They couldn't really do much apart from, we're going to get advertising in. Yeah, but your competitors that are non-Web3, you don't need to educate, or you can't have that model. What we saw over time, and we were lucky to see this because we've got Nick there to do the M&A side of things, we saw that on the investment side as well, it was becoming harder. Like money was less available, even if companies like, say, BCs announced that they've got this multi-million-dollar fund to look at Web3, they were deploying it a lot less because the bar was getting raised higher and higher, because at first you just had an idea, then you had to have a good pitch deck, then you had to have a really good website and video, and then you actually had to have a good product. And now it's not just a good product. You might show something that, okay, great, that's good, where's your traction? So that is not alone just crypto, that everything is seeing that. Any kind of investment was seeing that. So even early stage AI things were seeing that need to have that traction. It just shows us it's a maturity kind of sign as well. So we were seeing the evolution there, because these companies or projects, or startups or whatever they were, depending on the size, because we had big companies wanting to do stuff with blockchain, companies that said, well, we want to explore, what if we did some parts of our business like a DAO? How would that work, right? But all of those experimental things went away to much more what's hardcore, what actually will work over the next bit, given the failures that we've seen overseas. So it's almost like we've experienced like 3 or 4 different cycles just in a very short period of time, because crypto is fast tracking innovation.
Yeah, and very symptomatic of a higher cost of capital.
Yeah. It's many ways to kind of cut that, but like here in Australia, if that's what you mean, but like the high cost of capital here, we certainly, it's a great place to live, running a business, and having the customer base. Like put it this way, Australia versus the Philippines, 25 million people here in Australia, whatever, 27, maybe nearly 30, versus 110 overseas, and much lower cost base. Do you mean that, or did you mean something else?
I think the cost of living certainly pushes into innovation, as well as just the natural interest rate cycle, and money becomes more expensive to be able to borrow, and the hurdle rate on an investment becomes much more accountable to the cost of borrowing that money and investing that money. The substitution effect through different investment channels can get redeployed into things like fixed income or mid-market credit. When 24 months, 12 months ago, at a very benign cash rate, the capital which was pushed further out the risk curve, would absolutely be allocated to these sorts of high beta projects, I guess. And I think that's probably where the pitch deck and the VC model may have changed a little bit. The cost of capital has now increased, so it almost becomes like a traditional investment class where the proof has to be justified and guaranteed.
I think we probably saw similar things back when the internet was an early piece of technology. It went through its cycles. I don't remember what kind of where we were at in the economic cycle back then, but it's certainly something to not be discounted. People kind of think, oh, it's woe is me, I'm in crypto, and these things aren't being invested in because it's crypto. Will prove that it's better. We can't just be as good as, if you're doing something to tackle, for example, digital escrows, one of the products that we built, it can't be just as good and maybe a lower cost. It has to be so much better. It has to be, there's the hurdle of taking out the incumbent. There's a cost factor to that. And
inertia.
Exactly. Massively. Like, we've got the cold start problem. Great, there's a lot of investment and ideas and people in our community trying to do stuff there. But we get smacked in the face when things aren't, being taken up. Well, it's like, well, we need to show something better. We need to either network better and get into the right kind of channels, or this is why it's great to come together as a group, or we have to have products that are just so much better than what's out there.
Yeah. And it feels like that's the really cool leap forward, because those projects are on the ground and, they are getting the capital allocated to them, and they're building the teams and they're building the infrastructure. And in many ways, they're somewhat agnostic to, what might be a monetary policy cycle, because, the projects are so good, that they will be around, and they're the absolute stars that, that are being developed and people are looking out for.
We've got a few here, in Australia. So yeah, it's really interesting. We're excited to be here as, right at the web's part of it.
On your point about it takes time to build the use case. I mean, if you just trying to put in some kind of historical context. There was the story about how, pets.com, the domain sold for like 100 million or whatever it was back in the late 90s. Some stupid amount of money at the time because it got a lot of clicks. And the market just kind of hadn't worked out that just because you get a lot of clicks doesn't make a domain worth value. It's the business behind it, right? It's the internet itself. It's the ability to shop online. It took someone maybe like an Amazon or someone to come along and show the value of the internet in terms of, the domain Amazon.com was probably not valuable at the time, but, they came along and actually showed that an online business is super, super valuable. And so it feels a bit like in crypto, a little bit, there's a misallocation there because people kind of go, well, crypto is not necessarily the product, it's a tool, right? How do you work out how these things are sort of where the capital should go and where the real business cases are.
Yeah. And what are you working on? Can you talk us through that?
Yes.
I'm sure there might be some stuff that you want to keep to yourself, but in general, what are you...
Probably can't name client names just with some of it, but can definitely say that our world in terms of the building side of things is much more focused on two pathways. Like one is the blockchain, slow, takes longer to change, but yet is quite powerful underpinning of the future ways that banks and other entities will transact. The other side is AI, and there's a blockchain element to that I think viewers would be interested in. But on that blockchain building side, I mean, it was the digital escrows, and that's still an area of interest. It's not like it was there, then it's kind of gone away. There's still so much opportunity to have digital escrows. And why? Because escrows are an important part of the security of payments, the supply chain of payments. And there's so many industries here in Australia, apart from like cricket and AFN football and whatnot, construction is probably one of our biggest sports, right? We play it, we talk about real estate and housing, we have TV shows about it and whatnot. But because it was this massive kind of thing for Australia, as soon as things started to go wrong with supply chain and the cost of materials going up higher, all that pressure just conflates with seeing, what was it, like nearly 2,000 companies, I think 2,023 companies from mid-2021 until 2023, mid-2023 collapse. And these companies that they just, imagine being a trader and you don't know if someone's actually going to be able to pay you on the other side. So digital escrows are really exciting, but the thing that we did see there is that you need to have an ability to protect the payment. So everything that we're seeing now, to get commercial, we can't just have blockchain doing its thing on its own, because as soon as you want to idly abduct like a transaction, John over here, if he knows our addresses, he can see that and he can just go on a Block Explorer and see all of these transactions. That's a great thing in some ways when it comes to crypto, but to get businesses into the space, not a good thing. And so when we did our digital escrow thing, and especially with the Reserve Bank project, where we had stablecoin sitting on top of a CBDC as a proof of reserve, that was a great kind of thing because people could see that proof of reserve, or the CBDC is non-programmable in this particular use case. But what we did see was that even with stablecoin, we can't have it just like that. We need to have a zero knowledge proof on top of it. So it forced us to go down that path. And now we're seeing anything that is done in a commercial sense with blockchain and businesses and corporates using this kind of stuff, they're going to need zero knowledge proofs. And now it's a great thing. We're seeing CBDC being talked about overseas, like in the UK, with a privacy layer on top. And guess what? It's zero knowledge proofs. So those are the really exciting things. We're seeing anything that is manual and paper-based, like bank guarantees. There was groups that were doing that kind of stuff. We think it can be done better. So we're doing something around digital bank guarantees. And then on the other side, it's like anything to do with tokenization or real world assets is really, getting a full head of steam behind it. And hopefully, as you're pointing out of the capital cycle, like we'll see those investors coming in, those more mature investors coming in, investing in that. But right now it's got to contend with AI. And luckily for us, we've been working in that space, building private GPT models, private in the sense that your data doesn't leave the confines of where you're at, but also, we built it so it doesn't hallucinate. So it's done in a way where it doesn't just search everything to get answers. It searches only certain documents.
Doesn't hallucinate. I haven't heard that term before used with AI. Can you explain that to me?
So AI, if you imagine, is a probability model. Remember the phones where you had the little Nokias and it would predict the next letter? This is like that, but at hundreds, times the scale. So it's predicting the next words, the next sentences, paragraphs, etc. And that's how AI works. It's a probability model, but it's a really powerful probability model because of how much information we put into it. And the hallucination thing comes into play because if you ask it a question where it doesn't understand, initially it wasn't being given the safeguards to say, well, I don't know the answer, I'm just not going to answer. It went for it, and it went for it believably. And a lot of people believed it, even though it was always said, read the output. It's like, read the fine print. Well, you think no one's going to read fine print terms and conditions, that you see output, copy paste. So it led to things like New York lawyers, for example, putting forth in front of judges cases that did not exist, or academics in Australia putting forward a case for funding or whatever it was that had case studies in there that did not exist. But we discovered that if you actually point the large language model that's built off and trained from the internet, and you tell it to only search within these documents, and within those documents, if you find the answer, great, but if you don't find the answer, don't make it up. And it's as simple as, well, in some ways it's simple, but it takes a lot of coding for us to piece these things together so that John can, just open it up on his desktop and use it. We built a product, a box, you could say, that has that smarts in it. And we're doing it in healthcare, we're looking at it in finance, we're talking to some people in Web3. But that's all fine, that's good. This is a nice and easy and safer way to use AI in these businesses. But the interesting thing is coming where, hey, actually blockchain is useful here. So there's zero knowledge proofs that I told you about before. Imagine a world where in the future, you know that a doctor is using AI to do your notes and you get your report or whatever it is. You want to know that a human has read over that it's not just been the AI. We can use zero knowledge proofs to do these what we're calling micro signatures or attestations that, yes, it's come out of the AI, but I, as Dr. Mark, I've read this and I can click a signature. It's signed up with a ZK proof. And if it ever needed to be audited, they can prove without, having to send John's details or your details across to the auditors. Auditors can ask questions about the data, and because of the way ZKP works, you can just say yes or no to proving those factors about the model. So we're seeing the very importance of blockchain being a strong part of the future of AI as well.
Gotcha. Huge efficiency gains.
And can that also solve, I guess, day-to-day problems that people have, like scam phone calls or things like that? Are there real-world applications that might come much sooner than we expect?
Yeah.
Just to give more security around things like emails and phone calls, and really understanding who's sending them and who signed what might be a ledger transaction to instruct that sort of media.
I can absolutely see that kind of thing happening where, imagine, and look, this is not something I've seen built, but I can imagine for older people who are typically more prone to fall victim to those kinds of attacks, have a little assistant, a buddy that scans for those things that they've asked to be turned on by the exchange or by whatever is the provider, and that flags for them things where actually that doesn't look like a transaction with green light, or that doesn't, there's some suspicious things about that. AI could be used to help that, and whatever the mechanism, whether it's sitting on the phone as a little, thing that's part of what the phone provides, or it's something that's part of the app from an exchange like yours, or something else. But I definitely see AI being quite powerful in terms of how we protect ourselves. And given here in Australia, what's that, the National Scam Centre that's been formed, and we know that the banks have, done their debanking, so to speak, which has been a bit of an issue, but it's because there's been these issues around the rise of fraud. And even though chain analysis show us that as a percentage of the overall crypto market that's been growing, scams are still such a low percentile, less than 1% is illicit activity, but it's been big enough for the banks to just not have the resources to be able to handle the risk around this. And hopefully with the proper use of AI and, zero knowledge proofs to protect privacy and a combination of these different technologies, I can see us having a much better system for trading and investing and just doing things in this space than we currently have. The irony is that, people argue about we need to have this kind of regulation in blockchain. Blockchain is probably the best type of regulatory tool there is out there. And the smart contract is supposed to
It's in trial.
exactly. And if you're not supposed to sell something to a wholesale investor, to a retail investor, I can't think of any situation where you can't sell something to a wholesale investor, but if you're not supposed to sell something to a retail investor, right now you get in trouble for doing that because you still can. But with a smart contract, you have whitelisted, groups on there. You just aren't able to. So I think it's pretty powerful, what we'll be able to do on both sides. AI helping blockchain, blockchain helping AI. We just got to tinker and test. So,
I mean, yeah, absolutely. Blockchain technology is fundamentally a tool, and it's a tool that can, if used correctly, unfortunately, if it's being used incorrectly, because it's easy to move money by scammers, they'll use that. But there is still shows that it's a really fast way of making payment. I was having a chat with someone who works at a bank, and I won't obviously mention the bank, but they made a point. They made a point, and they were talking about an internal settlement. So they've got a customer who has NZD accounts and AUD accounts, and they need to basically, even internally, go, well, the guy's like, well, I need to get my money from AUD into NZD, and it's the same bank, same customer, and they go, well, it's still settlement plus T+3, right?
yeah.
And you go, man, like, people in crypto are worried their transaction takes 10 minutes, right?
Exactly.
Yeah. And so the banks could go, well, this technology could help the banks internally. I guess you've got all these incumbency and sort of integration issues, but it shows the power of the tool itself is fundamentally can be very transformational if we can get it right, and get the right hands using it.
Absolutely. I mean, is it the US? They're moving to a T+1 kind of settlement time for. Is it equities or is it, I can't remember what the transaction is, but that effectively means T+0 for us. So we need these solutions right now. What is it, John?
Yeah, I think it's the US equity market.
Okay.
It's going to be 1 day settlement.
Jeez.
And yeah, in terms of like the real world asset, there has to be just such a great use case for something like same day repo. Fixed income repo happens in huge quantities. To write a smart contract into a QSIP and, be able to either use an NFT to transfer a certain quantity of a QSIP across this repo. I just see it as being, such a cool solution for something that happens every day in just, in huge volumes of money to really provide, front-end liquidity for the whole of the financial market system.
You raised the point there, or I can't remember which one of you said it, but that those existing systems that are there, it's the integration into those. That's something that we need to be tackling. We know the technology works and it's being evolved over time. The greatest thing is because the majority of it is open source, we can see how these developments work. It's not like what the ZK proofs were invented and put out there in a vacuum. It's open source technology. We could take it, tweak it to fit. Like what we did was make them EVM compatible so that it doesn't matter. It's not only layer 2s that can do ZK proofs, but we believe that any blockchain that is EVM compatible should be able to have that. So, we've been able to do that, but it's not like we built from scratch, right? And going back to it, I think one of the things that we need to really understand is that we're going to do all this innovation there, but it goes to naught unless we figure out how to either. And it's a big behemoth to replace existing banking systems. So you're less likely to replace things. You're more likely to integrate. And then over time, as pieces, the technology change, I think we're going to see a very different rails for, commercial and banking kind of systems in the future. But that we have to find that first way in, right? So I think it's an important thing that people need to kind of realize, like, why isn't anyone investing in this token, or why isn't anyone buying into this project, or why am I not getting investment? How do you actually make it easy? I know people are working hard in this space, but now we need to work harder.
Yeah, okay. So what do you think it is that we kind of need? Like, what's the missing piece? Like, is it the sort of major institutions who arguably might benefit the most from it and still just don't understand it because it's new technology and maybe they just don't get it? Or is it just a real-world capacity to integrate these things so these old systems are too clunky? What is it? Where is it kind of getting stuck?
I think there's a few things there. We need to see more of these good examples. Australia, for the longest time, has spoken about regulation, and the regulation will unlock a few things that'll make it easy for people to invest because they're maybe holding off on the sideline because they don't want to go into a space that doesn't have regulation sitting around, although arguably we are kind of regulated in a way now because a lot of things we're doing are financial type securities when you look at it from the lens of that. But in any case, I think regulation helps. I think what happens overseas is more mainstream corporates and institutions come into the space helps. But more importantly for me as a developer, I think what we really need to see is a lot of these real use cases that are helpful. Escrows, I think, is just scratching the surface. There's going to be other things that are created out there. People could just figure it out now. Maybe even ask ChatGPT and just go, what are some ways that blockchain can help think of like some paper-based or very manual kind of systems and, build something around that. I think those are the things that are going to be really exciting. But as to take up, it's unfortunately, it's a bit of a luck of the draw, but you can create your own luck by being, part of this and getting government help. Like the MVP funding went away for a little while here in New South Wales and it's just come back. Mm-hmm. That dearth of not having that funding, and it was match funding. So it's not like they just gave money. You had to actually raise a bit of money and then they would match it. But that going away has probably hurt a lot of potential businesses that were out there. So like government having the funding, the right kind of investment from VCs and corporates and whatnot, regulation, and just the people that are in this space not wasting that money by actually building something that is good. The RBA thing, that was a sandbox and that was great because it showed how we can, here's a problem statement and we can bring different vendors together and choose the best ones, the top 15 to, tackle some of the problems there. We should see that more in other kind of use cases, like whether it's banking problems or problems in terms of how we have digital IDs. There should be this community type, almost crowdsource approach. Probably a lot to ask for, call them that. But I just think that, we've got a good opportunity here, and I can see a pathway where we waste the opportunity because we don't, we just sit back and don't take actions. But, yeah.
Fantastic.
Should we go into some predictions?
I was just about to say we should get that crystal balls out and really sort of go for it. Like, what are we?
Crystal balls, because they're different things.
You take your pick. What do we reckon? Maybe. Should we get? Should we quick top up? I need a coffee. From chat that bit out. Crystal balls.
I mean, all I've been drinking is coffee. Yeah. Yeah. Let's do it. What's the time in?
4:20.
That's good. That's it.
Fantastic. Yes, it's fun. So who was on last time? Who was the first?
We had Adrian.
Oh, Adrian.
Yeah.
God, that's going to be hard to follow up.
He was out first too, that G.
Who can you pick? Are you going to get a copy?
What do you want to?
Oh, yeah? Can you go, guy?
Yeah, I was 30 plus.
Do you want yours?
Yeah. Send me go.
Thank you.
Yeah, very good. We've just been really busy. I probably gave it a pretty poor representation at the start, but, Bitcoin led rallied, from like 26K US, above 40K today.
Mm.
Haven't seen a huge amount of like that performance.
Yeah.
And people have gone from like Bitcoin, not to ETH, straight to alts.
Darn.
And I look at,
they're just skipping it.
Yeah. And I look at two things that are very obvious, observable markers. One is that BTC ratio, and the other is USDT trading above parity. And because it's the on-ramp for alts. So, you go...
Okay, so there's more demand for it. Yeah.
So if there's more demand for USDT before they rebalance the pool, and it sort of stays there, and I know they're rebalancing the pool, but, it's staying bid. So people are happy to pay away, like 10%.
Yeah.
Not 10%, sorry, like 10 basis points to be able to get an on-ramp into...
Yeah.
Into...
Wow. Isn't just USDT? You've seen USDC?
USDC always tracks 1-to-1 because of, there's API integration directly with Circle through Coinbase and different things. So it always sort of tracks 1-to-1.
Oh, it's copy.
Oh, lovely.
USDT, floats a bit more, and it's a little bit slower for fools to reconfigure.
So you guys look at Glassnode and the online videos that there's an Aussie dude that's like a bit of an ambassador for Glassnode, pretty good with the on-chain metrics. And I know the other Nansen and all that are out there, but I really like watching his stuff.
Yeah, look at a little bit of Glassnode from the derivative side of things as to open interests.
Yeah.
And that's also, interesting, and you can grab it from, the primary source like Deribit or something like that.
Oh, yeah. Okay.
And they do like a pretty good monthly and then weekly write-up that we get that sort of says like, hey, we've got this many outstanding open positions for these expiries. And, in combination, so, the combination of like the premium that you see from a CME perspective, so where CME front contracts trading relative to the second contract, which sort of got up to almost 25%.
Wow.
Pretty impressive, but that sort of tells you that like instos are probably buying on a CME future. Anyone who can self-custody will buy it on an exchange, and the ETF's going to pitch somewhere between.
Yeah, the interesting thing, I'm not looking at that kind of stuff anymore, but early on I was really interested in the metrics because we got busy with other projects, but seeing things that you just don't see in traditional finance, like here's a wallet that's just bought X amount and it's really propped up the market. Like here's a wallet that hasn't moved in a while, it's all of a sudden moved. We can check the dates of it. Yeah. That the fact that is just an available kind of thing. Holy shit, like what a great kind of market to kind of get into. And even like when we're building some of these protocols, like we imagine that the future of like audits or accounting is so much different because it's now real time earnings when companies are mostly doing their stuff online. But then that was before we thought about ZK proofs to do the confidentiality thing, so that'll change. But just, the way that we do traditional market stuff is just so different.
And the TradFi thing, it really takes a whole lot of knowledge around, being blockchain literate, because if something's listed and it's on an exchange and, someone holds a certain percentage of that equity and they want to sell it, they have to notify. Whereas on-chain, you have to be tracking, wallets and who's selling various wallets.
Yeah.
And you can do it. It's really timely. So to see that someone might be, particularly large holder of a different protocol and, they're tipping it out, you can see that on-chain.
Yeah, whereas
early and quickly. It's sort of, there's more information that sort of has to be asked or monitored. And that's really interesting from a pricing perspective. And, it's in depth.
I'm jealous of you guys because you get to look at this kind of stuff all day. Anyway, I used to look at this kind of stuff. I was on the trading floor at a bank, and so you see what's going on in the markets because you have to. Crystal balls.
Oh, time to pull out the crystal balls, gentlemen. JT, you knew I was going to ask that question, so you obviously have some magical
2024 predictions.
Wow.
I think so.
What do you... Where do we go? Is it big bold predictions that we just throw them out there and see what sticks? What are you thinking?
You know what? There's okay, I'll go first then. So we have a pretty unique sort of view of the market, I guess, in the exchange because we kind of get to see a broad spectrum of everything that's happening. So one of the things I'd say is the sentiment has categorically shifted. The types of market participants who are looking to make larger trades, probably during it's called 6 months ago, we started getting some inquiries in terms of, I guess, more broader, not just people who are using business crypto as usual, but I guess more people who are there for the price action. And those buyers are now really only starting to just come through Mars. So we've only just started. So we're sitting here today, 40,000 US for one Bitcoin. So we're just getting started. So I don't know where we are for all-time high, a bit less than 50% under. We're just getting started. So I think we've still got a good 18 months of straight up. With the one thing that I think people are discounting probably a little bit more than previous cycles because, there has been less volatility and everyone goes, well, maybe the runs aren't getting quite as big. I think the ETF, not just the ETF, the demand from ETF is part of it, but the BlackRocks, the Fidelities, the Franklin Templetons, what they also bring with them is not just the sales force, but the marketing budgets to really talk about digital assets as a commonplace in portfolio. So we've got we know the halving's coming up. We're hopefully primed for a pretty good year. And we've also got probably, I think, a huge narrative shift now around, I guess, mass adoption and the amount of money that's on the side. So I haven't gone big. I'm thinking we see 200K plus. That's what I'm saying. This cycle.
Yes. And what's the end date?
Yeah.
Well, I think it'll probably somewhere towards the end of 2025. So let's go November 2025.
We've really gone into the future there.
Yeah, I like it. I would not discount that. Like, I think actually no, I'll discount it a little bit. I don't know if we'll get to 100K by then, but at least higher than what were the peaks in terms of US dollar?
Like 79,000, 79,000 or something.
Yeah,
it's in October or so, 2021.
Yeah, so what was that Aussie back then?
Really? It was. I made a bet with someone that was going to hit 100 grand, and I know because we fell about 5 grand short. I reckon it was about 95,000 or so in AUD terms at the time.
I can see us getting to by that stage well over like 100K. I don't know if we'll get 200, so I'm going to call it and say it's high hundreds. Not quite hitting 200 just yet. So maybe 180, 170 by that stage.
What's your reasonings for that? Why do you think it's just?
No, I think I can. There's always in markets, right? There's always these big calls for whether it's crypto or like price of gold or for whatever it is. Like, or I've got a friend that used to work on the old stock exchange floor and stuff, and would make his mostly positive calls around where we're going to see the S&P 500, heading. And I think with the information that we have now, there's very good reason for it to get to over 200,000, but there's going to be those things that we just don't see, whether it's another, unfortunately, an SDF, someone that I'm not saying that it's going to be Brian Armstrong at Coinbase, but something could happen somewhere where it's just unexpected, those black swan type events. And I think we'll be stronger for it because we've gotten rid of a lot of the worst actors. We've got stronger regulation, and hopefully we'll have more of a discerning kind of customer base that demands more from their exchanges to, they want it. They're not going to put their money there unless the exchange has these certain kind of features. They more of that, but I just think that we discount that, there's probably going to be something else kind of triggering like another criminal kind of thing. Hopefully it's smaller than the others. So yeah.
Who's going to jail then? That should be who's going to jail.
Who's going to do that? Or do you want to put, what's your price prediction first?
I don't know if I have a price prediction. I think 2024 may have one or two quite significant events of just complete market illiquidity. And that might be probably either pre or post halving, probably not too far away from that specific date. And it might line up with something like the first series of Fed cuts, which is now priced in broadly around June, which isn't too dissimilar to the halving time as well. But the supply of Bitcoin is so limited, and then if you were to cut that supply in half and ease monetary policy, and the market broadly looks at risk assets, I can see just pockets of illiquidity. And I don't know whether that might be a sharp pricing increase and then it sustains at that level, or it's a sharp pricing increase followed by a sharp price decrease as the market settles for some form of neutral pricing of better or longer term supply and demand. But I think as we go into 2024, I guess my prediction is more around volatility, where we're going to have some really sort of sharp events, and it will be very testing for some of those critical credit relationships in the market, because option pricing can go materially in or materially out of the market, out of the money very quickly. There's a whole lot of credit exposure whenever that happens, and it's going to be really interesting for the market in general. I think it's going to be that robust conversation around crypto's being built out extensively, and those credit relationships are being built out extensively for a long period of time now. We've gone through some pretty seismic market events which have forced people to look at credit relationships extensively. And I think the next avenue of that for me, 2024, is probably going to be pockets of illiquidity, and that's my prediction. I think there's going to be a couple of those days where we come in and the price might move by like $10,000 in one day.
Wow. Do we get a number from you, JT? What's the top?
So what's the end date? What's the...
Oh, you can tell us. You can pick a time frame and you can pick your price. So there's always a rule. You can give a prediction, you can give a timeline, but never give both. We're going both.
Going both.
On the lottery segments too.
I mean, I'm not one to predict. One Bitcoin is worth one Bitcoin.
Come on, JT. What number?
But I think, relative to US dollars, more supply starts coming in, at around 100,000 US dollars to one Bitcoin, I think. And just becomes a little tougher. People will sit there and solve for a market cap, and intuitively in people's thinking, I'm sure there are many long-term crypto holders that are happy sellers at 100,000.
Yeah.
So it takes a whole lot of new money and new demand to push through, or a new rhetoric in the market. At 40,000 US, knowing that it's been up towards 70, it would naturally make sense that the high is going to be above 70. So I'm thinking maybe around 100. And then we'll see additional supply.
The good thing is that we can see some of those wallets that just haven't moved, that are, that have been around for that many years. And yeah, I think a lot of people will probably be wanting to go to the on-chain metrics to have a look at that kind of stuff. So it's going to be interesting.
That's why I went first, Mark, because I knew JT would go away. Yes.
Yeah, chain bands, I go with that.
Let's go, JT.
Stick to our predictions, let's see.
Actually, you definitely have to have one last prediction. So Nick, who sits along with you, JT, on the trading floor, he... I didn't know whose credit was. I gave him credit until I learned it was actually a Harvey Dent quote, which was, you either die a villain or live long enough to see yourself become a villain. So how you mentioned before, who's the hero who will turn into the villain of this next cycle?
Goodness. It's so hard to predict who's going to go to jail. And I don't want to put any kind of names out there because I don't want to see anyone kind of go to jail, but I can see... I'll make something broad that I think is like safe enough for the potty, right? But like I can see another major, probably out of the States because it's a bit more litigious over there. Something else kind of major happening out of the US, and see it by name, but I do feel like we'll have a dampening effect if we've got the right regulations in place elsewhere. Like in Australia, the things didn't hurt so much, I guess, for the people on the ground.
Mm-hmm.
But I think we've got regulation, even if there are those criminal kind of actions, there's a lot less contagion to it. I think we'll be okay. But yeah, man, it's so hard. I want to like name names.
Maybe we shouldn't name it. Yeah. All right, I'll go next because I don't want JT to say something before I get my 2 cents in. I agree with you. I definitely don't want to see, you'd like to think that overall as an industry, people have learned their lessons and don't take shortcuts. Because I think, look at FTX, look at Celsius, look at all these names. There was leverage involved, but there's also a lot of shortcuts. And they took shortcuts and they got greedy, and perhaps it's human nature. And hopefully we've kind of weeded a lot of that out. So the only again, I wouldn't know a name because I think a lot of those bad actors have been flushed out. But I think if we have any villains, it might be the overnight successes that we haven't yet really sort of know. So I think it's someone who's going to be an overnight success. And people can get swept up in that and say, hey, this is an overnight success. This is fantastic. This guy's or girl is the next. They'll find themselves on Forbes magazine and then
Great predictor.
And then unfortunately, those shortcuts will eventually come back to bite them. So that's my prediction. Whoever's the villain, we haven't heard of him yet.
JT.
The villain. I have no idea. I'm really hoping no one. I think what's going to be really interesting, and certainly no villain. I think it's going to be the market perception of some of the heads of the regulatory bodies. And I think that's going to be really interesting because over the next 12, 24 months, if digital assets go mainstream, and it's sort of looking like they are, there's been there's been a lot of discussion around their appropriateness in society in general, and it'll be a true test and validation in a way. It is my general thought. I guess everyone is absolutely entitled to their opinion, and many people, particularly in this space, are quite opinionated in general, one way or another. Mm-hmm. And there isn't too much fence sitting. It's quite polar in terms of whether people agree or disagree that digital assets have a future, and what that role is. And so I think either side of that ledger, there's going to be one group that's right and one group that isn't. And for me, that might be more of a theme as opposed to, who's the next bad actor. Yeah. I think for me, it's more, we're still quite experimental here, and and those of us in the industry, we're very much pushing, and we see a whole lot of potential here, and we're pushing, and we're on one side of the equation. Some people, and rightly so, have differing views to that. I think, over the next 12 or 24 months, there just might be more of a consensus view as to how do digital assets sit in the ecosystem of the global monetary system, and hopefully no bad actors. But I think that there's going to be a whole lot of people that their underlying thoughts will have to change and move one way or the other.
Yep. Do you think the adults are in charge now after what we saw in the last sort of the issues with everyone sort of last couple of years?
Great question. Yeah, I think so. And I go back to the way Mark described that the process to gain funding for different projects. Like, I think that's completely changed, and that cost of acquiring a dollar or an investment dollar has materially gone up, and due diligence has become significantly more onerous, and that's a great thing. And I guess what that lends to is the people that are attracting capital, hopefully they're as ambitious and as equipped as some of the founders of some of these amazing projects which have gone forward, and then over history, when some of the bad actors have attracted capital, hopefully as we go forward, this new process, which is, I think we probably all agree, it's probably a little bit more onerous in terms of gaining capital. Hopefully that reduces the bad actors, and we really get quite measured entrepreneurs that come into the space, and they're going to be here for a long period of time building amazing things.
Yeah, I hope so. Yeah. Geez, that was some pretty measured questions to a tongue-in-cheek question.
Yeah. Well,
sorry.
I know we're circling on 200.
Stop being so sensible.
It's something real.
Yeah, absolutely.
Oh, it's just mean we don't want to see the bad stuff happen. We know it might, but this is.
Oh, it's good. No,
maybe don't.
That's it. Yeah, I think that's definitely the right answer. So we've probably got to wrap it up. So we have to work out how we're going to get in touch with Mark. So what's the best way for everyone to get in touch with you?
Yeah, sure. I mean, they can reach out to me on LinkedIn. I'm on there, so Mark Monfort, or they can go to the website, Not Centralized. It's notcentralized with an S.com. Or they can join the DeFi Association and come to one of our lovely meetups. So that's defi.org.au.
Absolutely. You've got to give that a plug. When's the next one coming up? And
it's going to be in the new year. We've got something over in Perth this Wednesday. So people are out over in Perth, definitely check that out. But in terms of the Sydney side of things and the other cities, we're going to wait until the new year. A lot of people are already kind of either away or they're planning their break. It felt like over the last month, especially November, because we had the Blockies Crypto Assembly, we had the Blockchain Governance Initiative Network was here as well. There was so many events in November. It feels like people just need a bit of a break in December. But yeah, new year for us.
Okay, awesome. Is that a wrap?
Thanks for coming on.
Thanks for coming on.
Great to speak.
We'll see you again there. Thanks.